For August 4th, 2022, welcome to Canadian Mortgage Weekly. I'm here joined with Sam Thompson, and my name is Joe Bladek, and we have a great episode planned for you today on Canadian Mortgage Weekly, Canada's only video mortgage news podcast. And we're really pumped about talking about the 7 ways you can finance your renovations. Sam, it's great to have you on with us today. How are you doing today?
Yeah, I'm doing great today, Joe. Thanks for having me on the episode today. It's going to be an awesome topic, looking at a few different ways to finance those renos. I know that summer's almost over and a lot of people, save some of those renovations for summer. So it's a good episode to go through as we enter into August.
Absolutely, yes. And with August, we have our theme, which is Renovations Month. So we'll be talking about all things renovations here on Canadian Mortgage Weekly. So be really stay tuned to see what we have in store for you there. And just to get right into it here, Sam, what we're going to be talking about today is just the 7 ways everyone can finance their home renovations. I know home renovations are a big topic in August, with a lot of people having the time to do home renovations and get things done on their home before school starts, or even they're planning right now to get those renovations done once the kids go to school.
Yeah, that's right. And I know we've talked about it before that there's a lot of employers and employment types now that are all work from home, or maybe it's a hybrid week. So the um, typical homeowner is a bit more intrigued lately, I think, in renovating their home space, making it the quality of living a little higher, because some of us are spending quite a lot of time at home these days.
Oh, quite a lot, Sam. Absolutely. We talk about that a lot here, and we see a lot of our clients working from home, and it's definitely something that's been a trend the last 2.5 years for sure. So, with that, without further ado, let's get right into it. The first way folks finance their home renovations is, let's start with the most expensive way, I guess, from top to bottom would be credit cards, whether it be a major credit card with a realtor with a retailer, or maybe a credit card like with a bank or something like that.
Yeah, I think we do see this as quite a common option, especially if you're already in the home renovation mindset. You might be tempted to put it on, the Home Depot card or the Lowe's card. I think we see a lot of those when we're looking at, clients' credit information. There typically is, a Lowe's card or in some vein like that. But some of them have some pretty steep interest rates for those, the amounts and the renovations they're putting on those cards.
You bet. Yes. I mean, there are some good major credit cards with rates about 18 or 19%. But yes, when you're looking at store credit cards, quite often they're 28, 29, or 29.999%. So definitely not the best way or cheapest way to finance your renovations, but definitely a very popular one, and one that is worth mentioning here on Canadian Mortgage Weekly.
Mhm.
Let's look at the second way people finance their renovations, and you know, this would be the slightly cheaper option, and something that a lot of people have already set up, probably for their own personal use, is their own personal unsecured line of credit, and we see that a lot too, don't we, Sam?
Yeah, absolutely. I mean, I know that it's one of those products that usually come up every once in a while. If you don't have one, your bank offers you, hey, you're pre-approved for 20,000, 30,000 for the line of credit. But then, tapping into those funds can, have a bit of a high rate when it comes to, the payback of that line of credit.
You bet. Yes. The good thing that is for the lines of credit is that it's interest only payments, though. So the
Mhm.
payments are a little low, but yeah, typically paying a lot of interest, and not really the best way to go, but definitely one of the ways that we see. And quite often, though, having a balance on an unsecured line of credit or a credit card can negatively impact what you qualify for a mortgage. So it's
Mhm.
also not really recommended, but definitely a popular way people do that. I guess the third way people finance their home renovations would be a separate unsecured loan from a lender or a bank or financial institution with a monthly payment. In this case, they would be paying off principal and interest, but
Mhm.
usually these payments are higher, interest rate is lower, but they are at a lower rate than, say, the unsecured line of credit or the credit cards from a major retailer or anything like that.
Yeah, absolutely. Again, it is a bit of a lower rate, but because they're paying the interest and the principal off, it does have, slightly high payments if that's the route that you're looking at going for some of those renovations. Because depending on what you're looking at renovating, it could be quite pricey. So to, apply, qualify for that loan and be into the repayment process, the costs can add up for that for sure.
You bet. And that loan payment's also going to impact any mortgage affordability on the other side if you're looking to purchase a second property or anything like that. Um, yeah, good point, Sam. Let's look at the next item here, and that would be a secured line of credit. And this is one of the most popular options we see.
Mhm.
Right, Sam?
Yeah, absolutely. We do see a lot of people, maybe when they've come to renewal or they're making some changes to their mortgage, sometimes they'll put in a HELOC so that they have that
Mhm.
ability so that it's tied to the security of their home, which does help with the rate, if it is secured through your primary residence.
You bet. Yeah. It's a little bit of a lower rate than an unsecured line of credit for sure,
Mhm.
but still a little bit higher than the rates on a mortgage, which is, uh, not as great. But the good thing is that people love paying just the minimum payment, and that would
Mhm.
be the interest only payment. However, these days we're seeing as the Bank of Canada slowly creeps up that interest rate, that monthly payment is getting higher. It seems like every month.
Mhm.
hmm so I guess the next way people, number five, I think we're at here, would be to actually ask family and friends for money, which is not the best way, not the most preferred way. Can get you into a little bit of trouble if you're can't pay back that loan for whatever reason.
Yeah.
But usually a little bit cheaper than all these other options we've talked about.
Yeah, for sure. We do definitely see, people getting loans or some of that money from family. In some cases, it is gifted with, if you
Yeah,
have, like we were talking, a very generous family with no expectation of payback or interest. But in some cases, they're expecting a little bit of interest to get back. And again, because it is family, if life happens, it could make things a little bit awkward. So.
yeah, it does tend to make things awkward if it is family sometimes. But at the same time, let's talk about the next best way. So the
Mhm.
second cheapest way to finance your renovations would be to actually refinance your mortgage and use that equity to fund your renovations and finance your renovations. In this case, usually that rate's the lowest rate because usually is less than a secured line of credit even as well.
Mhm.
And it can really set you up with one payment for your home and the renovations together. So you're not really noticing too much of an impact. And we see this way being a very popular way for folks that are looking for a very cost effective solution, right, Sam?
Yes, I think a vast number of the renovations that we see do come through a refinance, or again, when we're looking at refinancing or renewing at the end, typically there is a number that clients have in mind or a budget that they're hoping to achieve to pull it from the refinance. And depending at, even when you do the refinance, you could even be saving on just a lower rate when comparing, the existing mortgage going into it. You might be able to get actually a lower rate on the refinance and be able to take that extra cash out.
You bet. And with refinancing home, just make sure that you don't start the process after you rip out the sink and the vanity and the walls. Make sure you start it before that all happens because the bank will want to make sure they're financing a house that's not under construction, even though they know that you will be under construction eventually.
Mhm.
And the cheapest way, and I didn't want to plug mortgages as the cheapest way because obviously that's not the cheapest way. The more responsible and most cost effective way would be to actually save for those renovations and budget properly in a way that you have those savings ready for your renovations when they come up. And that's probably the least likely scenario we see, but it's definitely a way that we recommend if possible. You can go that way. If you have renovations coming up, you start putting money aside for that. And when the renovations do come up, you have that money ready to go. So you're not really borrowing any extra. You already have those funds. And as you know, Sam, there's no interest rate or payment attached to financing your renovations in that regard.
Yeah, absolutely. If the savings are yours, then like you're saying, it's just budgeting ahead of time and getting prepared so that you can use your own savings for any of those types of renovations. I feel like number seven's probably the most, Dave Ramsey certified
Yeah.
option to just, tap into those budgeted funds that you have set aside for these home renovations.
Yeah, nice Dave Ramsey plug there. We definitely love Dave Ramsey here on Canadian Mortgage Weekly. So if there's ever anyone that I look up to, it's him and his financial principles as well. No financial interest in Dave Ramsey whatsoever, though.
Nice.
Uh, and so those are the 7 ways people finance renovations and home improvements. And I know that's probably not all the different ways, but it's all the ways that we see usually. And typically, when we do a refinance, a lot of the times we are paying out an unsecured line of credit or a family loan sometimes, or a credit card balance that has been accumulated from those renovations. So
Mhm.
definitely something to consider if you are looking at doing some home renovations come the September, October, November months when kids go to school. Uh, Talk with your mortgage professional. Give us a call, Sam, myself, Joe Bladek, or Terry Lynn at the office, and we can start planning your renovation, showing you what you can afford. And wow, with the home equity these days that everyone has, with the house prices the way they have gone up these last few years, a lot of
Mhm.
people have a lot of untapped equity waiting there for them if they want to access it for home renovations.
Yeah, that's absolutely right. Yeah.
Yeah. So looking forward on the next part of our show, we're going to get right into the stats here today. We're going to be talking about some of the interesting and exciting news that's coming out of the Canadian mortgage world. We're always very pumped to report it here on Canadian Mortgage Weekly, which is Canada's weekly video mortgage news podcast. And with that, Sam, I don't know if you can bring that up there, but I would love to talk about where the bond yield is at today.
Yeah, absolutely. The bond yield has been yielding some good news for some people that have been monitoring the yield and even looking towards the fixed rates. Since about I think it's June 14th, where there was a bit of that spike there at I believe it was around 3.8. But since
Mm.
then, we have seen, a gradual downtrend. Obviously, a few peaks on the way, but it's currently sitting at 2.81, which we've seen, this result in the fixed rate just over the last few weeks, eh, Joe?
We really have. Yeah, it's been a really exciting bond yield to watch this time of year after seeing it trending up since about September of last year, with fixed rates following very closely over the last number of months here. Uh, we are finally seeing, just as of last week, lenders starting to lower interest rates on mortgages. So we've seen 5-year fixed rates drop quite considerably since the middle of July, uh,
Mhm.
which is absolutely unheard of, especially with all the articles and news centers reporting that rates are going up and that customers are to expect that payments will go up. But here we're seeing 5-year fixed rates drop 40, 50, possibly more basis points at this point. And I'm not sure if this is a trend that's going to continue, but it definitely has been trending that way in the last number of weeks.
Yeah, absolutely. And it does also, strike a chord for anybody who's looking to get a pre-approval. Now that we're seeing that even some
Mm.
of those pre-approval rates have been on the decline as well, it's definitely a good time, forecasting what's to come, to get in if you're not pre-approved yet, or maybe you were looking at where rates are earlier in this summer and thought, maybe a pre-approval wasn't quite worth it. Now that we're on a bit of a downtrend, it's a good idea to look into getting pre-approved again and securing these discounted rates that we've been seeing.
Oh, yeah, absolutely. And we've really seen also, as this has been happening, there have been clients calling us now more frequently and just in the last few weeks looking to secure pre approvals. And because of the real estate market, and we'll get into that in just a few more slides here and what's happening there. Um, but with the mortgage rates following this path right now, We'll keep an eye on this here on Canadian Mortgage Weekly. And Sam and I will have another report available to you next week on Thursday as to what's happening with the bond yield and 5-year fixed rate specifically. Let's move on to the CDOR rate today. I know, Sam, that we frequently go over this metric to determine whether or not a variable rate mortgage is a viable option or a competitive option in comparison to the fixed. Now, it has been tightening lately, but tell us about what's going on here.
Yeah, absolutely. So currently, the CDOR rate is sitting at about 2.915. Now, the last time we reported it, it was just around 2.5%. So we have seen a bit of an increase in the last few weeks, but when you factor in and consider, we're really looking here at the variance of the CDOR rate from the prime rate. And as we've been seeing these Bank of Canada increases, we've been seeing that prime rate increasing as well. So the magic number we're looking for is for this to be under 2%. And given, the current metric, the current data that we're seeing now, it is still under 2%, sitting, variance at about 1.7%. So it is indicating, according to these metrics and data, that variable is still a viable and competitive option.
Absolutely, yes. And with that, we would like to just chat about just if you took a variable rate mortgage today, how many increases are you going to be at until you hit the current fixed rate? I know that that's something that a lot of our clients ask us about. Is it better to take fixed? Is it better to take variable? That's all dependent on your personal situation. But if you were to take a variable rate today, we're seeing that it would take both 3 to 4 quarter point increases to actually hit the current 5-year fixed rate
Mm-hmm.
versus paying just the variable, paying the fixed rate right now, which automatically starts you at that higher payment. So if you think that rates are going to go up another 75 basis points, then might be fixed for you. But the thing is that you also eliminate those future savings once the rates go back down. So it's something to really consider and something to really follow here. We're going to be following this in Canadian Mortgage Weekly as well. So keep an eye on this here. And I know that if you were to go above the 5-year fixed rate, I think we're at, is it 5 or 6 quarter point increases? Is that where we're at there, Sam?
Yes, yeah. So I believe at about 5 to 6, we would exceed the current fixed rate that we're sitting at now. So again, like you're mentioning, the variable is a competitive option because you're also forecasting on those future savings. Whereas, locking in fixed, you're already starting higher than the variable. And, later down the road, you might be looking at financing a refinance into a lower rate, which is going to cause an extra couple fees rather than a variable rate mortgage.
You bet, yes. With the fixed rate mortgages, we are no stranger to interest rate differential fees, and those
Mhm.
can be quite more significant than breaking a variable rate mortgage. So, 5-year fixed mortgages, they do lock in your payment, but they also lock in your mortgage in such a way that there's like Sam's saying here, a larger penalty to get out of it, whether you're refinancing or selling and buying.
Mhm.
But yes, let's look at the next slide here, which is the Bank of Canada rate announcement. I know that we had some big movements on the rate last time Bank of Canada met, and there's another announcement coming up shortly. Tell us a little bit about that.
Yeah, absolutely. So the the current overnight rate from the Bank of Canada is 2.5%, which in itself is a rate we haven't
Hmm.
seen since 2008, but it came right after, the Bank of Canada really, I think, shocked a lot of consumers and even maybe a few economists by having a rate increase of 100 basis points. Which I mean, we haven't seen that since the 90s, coming in at 1998. So the Bank of
Yeah.
Canada has been making some pretty bold moves, mainly to tackle inflation,
Hmm.
according to the monetary policy that we reviewed on the rate announcement day.
You bet. Inflation's definitely a little bit out of control in Canada. So the Bank of Canada is pressing forward with this. So if you're out there, the Canadian homeowner, and you want inflation to slow down a little bit, we urge you stop buying things right now. As anyone who's buying things right now, thinking that prices are going to continue going up, well, they're just contributing to the prices going up. And if everyone was just pare back on the purchasing for a little while, we probably see inflation take a little bit of a dive. But hence, everyone in Canada loves to be a consumer and loves to buy things. So as this is happening, we'll have to see how much action the Bank of Canada does need to take on inflation and the Canadians' appetite for purchasing power.
Mhm.
So yeah, we'll keep an eye on this. September 7th is just around the corner, just over a month away. It's
Mhm.
going to be an interesting show. We'll have a pre-rate show and rate announcement episode special on September 7th. Looking forward to that. Um, let's look at the national house price average today.
Yeah, so again, we have some more good news if you're somebody who, has been waiting out the market or, looking for a
Mhm.
balancing, or maybe you found earlier this year that you're, weren't really able to qualify for much. We're seeing, for the fourth month in a row, I believe that the house price average has decreased, and we're currently sitting about $711,000 as the national house price average. So, it's quite a big change and a bit more of a palatable number than we were seeing back in February, where it was almost 100,000 higher in just a few months.
Mhm. Absolutely, yeah. So with the house price coming to where it's at today, we are seeing that decrease. So that we are seeing in certain pockets in Ontario, there are some really good deals out there.
Mhm.
I know there was a lot of folks that last year were waiting for the prices to decline to this point, and it's interesting though because those people have not surfaced, and they seem to be thinking that uh, you know maybe the interest rate is too high to dive in right now. But this is the time to find these deals. Houses are sitting a little longer,
Mhm.
and we have been seeing some other trends that we'll talk about in just a second, saying that maybe this will swiftly change shortly. Something that take with a grain of salt. We're not experts in the real estate field, but let's talk about a little bit about that in a second. But right now, we are seeing that the average household income needed to purchase the average priced home right now is $138,000, and the amount of funds you would need to purchase a home right now is about 41,500 plus closing costs. So that's a downward trend. So the income required to purchase a home is going down. So that is good news as well. Yeah,
Yeah,
but
absolutely.
so talking about some of the metrics here on real estate and the local Barrie market, where you're located there, Sam, and we work
Mhm.
out of quite frequently, Barrie, Aurelia, Simcoe County. For those folks watching today, if they were to buy a house right now, they'll probably get such a significant discount to where prices were just a few months ago. It's unreal. Let's take a look at that.
Yeah, absolutely.
So we spoke with a real estate agent in the Barrie area, Tim Kapp of Keller Williams Realty. Uh, and there was some interesting stats coming out of there. So we have that the prices are down 26% since the height of the market. So 26% off in terms of the house prices. So anyone that has been waiting for the market to drop, this is fantastic. We're also hearing reports of showings now increasing
Mhm.
quite considerably on homes. People are out there being more interested in seeing what the deals are. And there's actually more homes selling as well, comparatively to a few weeks before. So it's pretty awesome to see that.
Mhm.
There's there are folks out there that are thinking this is a market where there are deals to be had. And looking at the detached median home prices there, they are still actually up 3% from July 2021 to 2022. So overall, year over year, we have seen an increase despite these huge decreases downwards since January, February of this year.
I think that's something that most realtors will try to open, a lot of clients' eyes to is, paying more attention to year over year, gains, because I think, historically we see that even when there is month to month fluctuations, and we're seeing that drop of 26% since February. typically the year over year does still remain positive and is still appreciating that home value for your home purchase.
You bet, yes. So, with that information, if you're out there waiting for house prices to drop, I suggest speak with your local real estate agent. If you have no real estate agent, give Sam or myself a call. We have a list of partners that we worked with over the last number of years that we trust and value and can refer you out, whatever market you're in Ontario, and can get you set up for a appointment so you can take a look at some of these deals out there. I mean, 26% off. That's fantastic. So I know when I walk in, I know a lot of folks when they walk into, say, Best Buy or Home Depot and they see 25% off, it's almost like you don't want to lose out on that deal.
That's right.
Yeah. So with that, thanks for joining us today. My name is Joe Bladek, and we're here with Sam Thompson. Sam Thompson is a mortgage agent based out of Barrie, Ontario. He moved here just over 2 years ago and has been with Mega Mortgage now for almost 2.5 years. Really great to have Sam on the show today, living with his wife and pup in Barrie. So thanks for being on today's show there, Sam, and with your insights.
Yeah, thanks for having me, Joe. It was a good topic to cover. And for anybody who doesn't know Joe, he has been in the industry for, coming on 12 years this September. So that's a very, exciting statistic and lots of deals and insight that you have in the market, Joe. So thanks for hosting this episode and for having me on today.
Thanks very much, Sam. If you're looking to book a time with Sam, myself, or Terry Lynn, click on the link below and schedule your appointment today. In the meantime, watch out for next Thursday as we dive into episode 92, where we're going to be talking about the top 3 things people renovate when they do a refinance. Maybe you're looking to do some renovations and you're looking for some ideas. We'll be talking about some of the top things people renovate. We're looking forward to sharing that with you here on Canadian Mortgage Weekly, which is Canada's weekly video mortgage news podcast. So thank you for joining us today, and we'll see you next time.